Our next guest is hopping on the ARM train early, initiating the stock at a buy with a 59 target as well as above the top end of its expected 47 to 51 range. Joining us with his call is New Street Research's Pierre Ferragu. Pierre, are we of the mind that there's a lot more runway on data center and AI? Is that the theory?
Yes. So what's interesting about ARM is that it's indeed an AI play, but it's very remote from what's happening in the data center today, where you see like the deployments of these very large AI clusters that are mostly based on ASICs and GPUs. ARM has very, very little presence there, almost zero. ARM is really the play about AI getting everywhere. And so what's happening today is that ARM has been working for several years at introducing to their clients their next generation of products, their next architecture, ARM v9. And ARM v9 basically brings the building block for AI to work well inside a smartphone, inside an IoT device, etc. And the rollout of ARM is a major pricing power event for ARM because this new architecture adds a lot of value to their clients, and so they can increase how much they charge a lot to their clients. So what you're going to see over the next 5 years is ARM delivering very, very good growth, even out of markets like the smartphone market, where underlying growth doesn't really exist. Smartphone is ex-growth, but ARM is going to grow very nicely because as AI gets into the smartphones, ARM is one of the main beneficiaries, if not the main beneficiary.
Dee mentioned the cornerstone investors, and we'll be watching NVIDIA and Samsung and Intel and Alphabet. Does that should it give investors a bigger sense of comfort?
Yes, Carl. I think when you think about ARM, it's almost like a private industry standard. If you want to do a smartphone, you have to use ARM. If you don't, you're really going to suffer and you're never going to be successful. And so ARM is a very safe business from that perspective. You know, it's a default option. Everybody is going to use ARM. So the big risk for ARM is really to see their clients growing less comfortable with this dependency and considering ARM, as something of which they would want to de-risk themselves and start creating an alternative. So that's really like the most important long-term risk you can think of about the business. And so seeing these players like Apple, Qualcomm, Broadcom, and others taking a stake, even if it's like relatively small and symbolic stakes, into the equity of ARM is to me an extremely positive signal. The industry is telling you, we trust ARM. ARM is a standard. ARM is doing the right job to give us the platform, the ecosystem we need to move forward.
The other big risk investors talk about is China and the fact that it's China ARM. It doesn't control. It's heavily dependent on that for revenues. China is a big question mark right now geopolitically with the U.S. And then just the cyclical pressures, right, Pierre? It's not immune to end market weakness, especially in smartphones. We're not exactly at a high point in the smartphone cycle.
Exactly, and that's the reason why I like to characterize ARM today as dipping in on the wave, because we are at a low point in smartphones. Like the really, really bad environment in smartphone is today. And so what you can expect from here is actually a cyclical recovery that might be very slow, by the way, but it's going to be trending upward. On China, I think you make a very strong point. China is more than 20% of ARM's revenues. ARM doesn't have a direct access to China. They have to go through like a local subsidiary on which they don't have control. I don't think that part of the story is a problem. If you're using ARM in China today, if you are like a chip manufacturer, like a Huawei or anyone else, I can tell you that you rely on ARM. You cannot do business without ARM today. So you'll make sure ARM gets paid for what you do with ARM. Because at the end of the day, you need like a daily access to ARM, daily access to ARM's partners, like your EDA, like Synopsys or Cadence, or your manufacturer, like SMIC and TSMC. So there is no way ARM can get out, China can get out of ARM in the near term, even in the next few years. In the long run, of course, China wants to grow more independent from the West, and ARM is the West. And so there is a real question about, in the very long run, is the weight of China in ARM's business coming down or not? And my view is that it is going to come down. But we are talking, maybe China disappearing from ARM over 20 years. That's the kind of pace, in the worst case, you would be thinking of. So losing 20 points of your revenues over 20 years means you have like a 1 point headwind on your growth every year. So if you are like a healthy business, it's not a game changer. It's a headwind, but it's not a game changer. And what's for certain is that for a business with that strength, with the strength of the ecosystem, there is no near-term downside like China stops using ARM on short notice. That's not really possible.